Welcome back to our channel, where we dive deep into the world of cryptocurrencies. In today's video, we'll be exploring the recent price drop in Bitcoin, uncovering the multitude of factors driving this downturn. From market corrections to regulatory uncertainties and macroeconomic challenges, we'll dissect the complexities behind Bitcoin's price dynamics. So, if you're curious about the forces shaping the cryptocurrency market, stay tuned as we unravel the mysteries behind Bitcoin's recent decline. Bitcoin, the pioneering cryptocurrency, has experienced significant price volatility throughout its existence. In recent times, the market has witnessed a notable downturn in Bitcoin's price. Several factors contribute to this decline, reflecting a complex interplay of market dynamics, regulatory pressures, macroeconomic conditions, and internal challenges within the Bitcoin ecosystem. Market correction. The meteoric ascent of Bitcoin in late 2023 captured the attention of investors worldwide, catapulting the cryptocurrency to unprecedented heights. Yet, such rapid rises often arouse skepticism, as they may indicate unsustainable price growth fueled primarily by speculative frenzy rather than fundamental value. Market analysts have highlighted the absence of a typical price correction following Bitcoin's surge, suggesting that investors may have become overly optimistic about its future potential. This heightened enthusiasm can serve as a warning sign, potentially heralding a market correction where prices adjust to more sustainable levels. Consequently, the recent downturn in Bitcoin's price can be viewed as a natural corrective phase, aimed at restoring equilibrium to the market and tempering excessive exuberance. Such adjustments are inherent to the cyclical nature of financial markets, ensuring that prices align more closely with underlying fundamentals. While fluctuations may induce short-term uncertainty, they also serve as crucial mechanisms for maintaining market health and stability in the long run. Thus, while the recent dip in Bitcoin's price may spark concerns, it also signifies a necessary step towards fostering a more robust and resilient cryptocurrency ecosystem. Regulatory uncertainty, impact on investor confidence, and market sentiment. The regulatory landscape enveloping cryptocurrencies, particularly Bitcoin, remains dynamic and subject to ongoing scrutiny from regulatory bodies worldwide. In the United States, entities such as the Securities and Exchange Commission, SEC, have intensified their vigilance, aiming to monitor and regulate the burgeoning cryptocurrency market more closely. This heightened regulatory oversight introduces a layer of uncertainty for investors who grapple with the potential ramifications of regulatory actions on Bitcoin's legality, taxation, and market accessibility. Confronted with this regulatory ambiguity, investors may opt for a more cautious approach, leading to a reduction in demand for Bitcoin and a subsequent decline in its price. The looming prospect of regulatory intervention casts a shadow over the cryptocurrency market, exacerbating price volatility and eroding investor confidence. The fluidity of regulatory policies adds an additional layer of complexity to an already intricate market environment, as market participants navigate the evolving landscape while striving to anticipate and adapt to potential regulatory changes. Ultimately, the regulatory scrutiny surrounding Bitcoin underscores the importance of regulatory compliance and transparency within the cryptocurrency space, albeit at the cost of heightened uncertainty and fluctuating market dynamics. Macroeconomic headwinds, navigating economic turbulence and monetary policy shifts. Bitcoin's price dynamics are intricately linked to broader macroeconomic trends and global financial conditions. Recent developments, such as interest rate hikes, inflationary pressures, and geopolitical tensions, have injected uncertainty into financial markets, prompting investors to reassess their asset allocation strategies. In times of economic uncertainty, investors often seek refuge in traditional safe haven assets, such as gold and government bonds, at the expense of riskier investments like Bitcoin. Moreover, concerns about inflation eroding purchasing power and central banks' monetary policy responses can influence investor sentiment towards Bitcoin, as it is often touted as a hedge against inflation and fiat currency devaluation. The confluence of macroeconomic headwinds contributes to a risk-off environment where investors opt for conservative investment choices, dampening demand for Bitcoin and contributing to its price decline. Miner woes. Unpacking the impact of hash rate dynamics on Bitcoin's price. Bitcoin mining, the process by which new Bitcoins are created and transactions are verified, plays a pivotal role in the functioning of the Bitcoin network. The hash rate, a measure of the computational power expended by miners to secure the network, has surged to new highs in recent times. While a higher hash rate enhances network security and resilience, it also imposes significant costs and challenges for miners. Rising electricity costs, hardware expenses, and operational overheads can exert financial pressure on miners, prompting them to sell a portion of their Bitcoin holdings to cover expenses. The influx of newly minted Bitcoins into the market through mining activities can increase supply and exert downward pressure on Bitcoin's price. Moreover, fluctuations in the hash rate may signal shifts in miner sentiment and profitability, influencing market dynamics and investor perceptions of Bitcoin's value proposition. Bitcoin in 2024, roller coaster ride and halving anticipation. Bitcoin's journey in 2024 has been tumultuous, marked by highs and lows that have left investors on edge. After reaching a peak above $55,000 in mid-March, as reported by Forbes, the cryptocurrency now faces the looming specter of a potential plunge. With April's Bitcoin halving event on the horizon, where mining rewards are halved, some experts anticipate a possible uptick in prices. However, forecasts remain highly divergent, adding to the uncertainty surrounding Bitcoin's trajectory. While optimistic projections, such as the Economic Times estimate of a year-end high of $200,000, fuel hopes of a substantial surge, more conservative predictions paint a bleaker picture, with projections as low as $35,000. Amidst these conflicting outlooks, apprehensions about a potential Bitcoin dump persist, underscoring the enigmatic and captivating nature of the cryptocurrency's future. Despite the ambiguity surrounding its path, the allure of Bitcoin's potential remains undeniable, promising continued intrigue for investors and enthusiasts alike as they navigate the ever-evolving landscape of digital currency. Conclusion: navigating Bitcoin's volatility amidst shifting market dynamics. Bitcoin's recent price drop reflects a confluence of factors, ranging from market corrections and regulatory uncertainty to macroeconomic headwinds and minor challenges. While these factors offer insights into Bitcoin's price dynamics, the cryptocurrency remains inherently volatile and susceptible to sudden fluctuations. Investors navigating the cryptocurrency market must exercise caution and diligence, considering the interplay of various factors and their potential impact on Bitcoin's price trajectory. Moreover, regulatory developments, macroeconomic trends, and technological advancements will continue to shape the evolution of the cryptocurrency landscape, presenting both opportunities and challenges for market participants. Amidst the uncertainty, a nuanced understanding of Bitcoin's fundamentals, coupled with prudent risk management strategies, is essential for investors seeking to navigate the complexities of the digital asset market. As we wrap up our thorough examination of the recent Bitcoin price drop, we trust you've gained valuable insights from our analysis. Your support means the world to us, and we're grateful for your engagement. If you found this video helpful, please show your appreciation by hitting the like button and subscribing to our channel. By doing so, you'll stay informed about future discussions on cryptocurrencies and market trends. We're eager to hear your thoughts, so don't hesitate to share them in the comments section below. Your feedback is invaluable and guides our content creation. Until our next video, we wish you success in your investment ventures. Thank you for being part of our community and for watching.